once again to Pro Accounting Academy. This is your CPA Kiwewa Ayman. In today's video, we are going to look at final accounts. Specifically, we are going to look at income statement. You know, when we are preparing our books of accounts, the end goal is to determine whether the company is making profit or it is incurring a loss. So how will you know that? Of course, we cannot determine that by mere looking at books of original entry. Today we need to look at financial statements. Basically, let's take a look at income statement, where we are going to know that business is either making profit or incurring a loss. You never know that the business is performing unless you prepare the income statement. Let's take a look here. When you look at this income statement, basically we are saying is a financial report that shows a company's revenue. Basically, we are looking at what you are generating, maybe from selling your goods or selling your product. We shall look at expenses and net income. Some people may call it profit or loss over a specific period of time. What you need to know here, you need to understand, as we are operating, selling goods, we generate revenue. Selling service, we generate or provide service, we generate revenue. As a result, you can't generate revenue without incurring some expense or costs. So this statement is going to show us, as we are selling our products, how much are we generating in terms of sales or revenue, expense incurred as well to produce that revenue, or to generate that revenue, and the net income or profit or loss over a specific period of time, which can be usually this one. We always prepare it once in a year, that is at the end of accounting or trading period. So as you close your year, suppose your year runs from 1st January to 31st December, at the end we have to prepare our income statement to show whether we have made a profit in the previous year or we have incurred a loss. That will help us to make assessment about the performance of the business over a given period. What we need to understand here, it helps stakeholders. Which stakeholders could be the investors? You are presenting to investors so that they can understand how well the company is performing financially. Of course, once you show the investor that you have made the profit or you have incurred loss, you can as well understand how the company has performed in the past year or previous year. In simple terms, when someone talks about income statement, just know it's a statement or report that shows how much money the company earned. How much money have you earned in the previous year? We always prepare for the previous year. Or how much money you have spent during a particular period. So this income statement is a direct report, basically showing us how much money the company has generated, how much money you have spent. The moment you know how much money you have generated, how much money you have spent, you can easily subtract and you get to know the profit you have made over a given period of what? A given period of time. That's why here we are saying it indicates whether a company made profit or incurred a loss. So whenever someone talks about income statement, think about two things. One, either you will need to determine the profit made by the company or the loss incurred, because either way, anything can happen. You can generate a profit or you can incur a loss. We shall see how that happens in the business. So, in brief, our income statement is just showing us whether the company has made a profit or it has incurred a loss. In other words, it shows the financial performance of the business. As we talk about income statement, we need to look at some components. Components, we are looking at parts which make up our income statement, all the elements. So when someone talks about income statement, what are those parts or elements we must include as we are trying to determine the net income for the business? Number one, we need to look at the revenue. Revenue, other people may call it sales, others income. We are going to look at each in details. Then we need to know that it must have the cost of goods sold. We are going to look at it in details. We need to find their gross profit. It has operating expenses and net income. The moment you include your 5 parts in your income statement, we shall say you have answered the question of income statement, or you are trying to determine the net profit or loss incurred business. So there's no way you can know that the business has made profit or incurred a loss if you don't know the revenue generated. As well, knowing revenue alone is not enough. We need to know the cost of goods sold, how much we incurred to produce or to sell that product, and the gross profit, operating expense. We shall say that cost you incur to generate or make the sale or to operate your business as you raise this revenue and net income. We are going to look at each in the details, see how and the meaning of each component or element here. Let's start with component one. That is our revenue, sales or income. And we are saying this revenue is very simple. This is the total amount of money earned by a company from the core business activities. We are looking at core business activities. Take an example. If you are doing in the education institution, for example, university, the core business is providing education service. If you are selling goods, the core business will be selling a particular products or providing services, selling products or providing services. However, this revenue is before incurring any expense. In other words, the moment you sell goods, the money you collect before subtracting any cost or expense, that is taken as our income, that is taken as our sales or revenue. So as we are preparing our income statement, we shall be talking about revenue. Take a note here. This revenue, when we are preparing income statement, we use what we call accrual concept. And accrual concept is looking at both cash or and credit. In other words, it doesn't matter whether you have sold the good and you have received the cash. Even when you have sold the goods and the customer is not paid now, promises to pay at a later stage, we need to include in our sales. In other words, our sales include both cash sales and credit sales. You get total sales and report it. So if they give you a question with cash sales and credit sales, please, you get total sales by adding cash sales and credit sales. Let's take an example of our revenue here. Take an example here. When you look at this example, we are looking at a clothing store. This company maybe deals in selling clothes. So a clothing store sells shirts worth 100,000 US dollar in a month. The revenue now for that particular month, if someone asks, now how much revenue generated by that company? Remember we are saying this company is sells a shirt worth 100,000 in a month. So if someone asks how much revenue or sales made during that particular month, we shall say the revenue for that month is 100,000. Becomes very easy to determine or to know the revenue. There is no logic behind determining the revenue for the company. Sell goods, the money you get from selling goods, that's our revenue. Don't subtract anything. Just look at your cash sales and credit sales, add them to get total sales or total revenue or total income without before subtracting any other expense, any expense. The total money you collect after selling. So don't overthink what's the revenue. No. Revenue, look at what you have sold, the money you have qualifies with your revenue. Hope the concept of revenue as our element, number one element in income statement is very clear. So the moment we understand the revenue, we can go ahead now look at another element called cost of goods sold. When I talk of cost of goods sold, this is also an expense, but we call that as direct cost. Which direct cost? This represents direct cost of producing this good or service. It can be producing or selling. Maybe you are dealing in wholesale, you go, you buy also from the producer, or you are in retail, you buy from wholesale. The cost you incur, the money you spend to buy goods so that you can also sell, that money you incur to buy goods is taken as cost of producing or cost of selling good or service. That's why you're saying producing the good or service sold by the company. Of course, it includes direct costs like cost of buying raw materials. Labor, here we are talking about direct labor. If it is indirect, we shall put it under other expenses and even manufacturing expenses. So for cost of goods sold or cost of sales, there we basically look at direct cost you incur to sell this product or to produce this product. So for us to know whether we are making profit or loss, we need to know one, what we have sold, that is our revenue we have generated. Then we subtract any direct cost incurred in making that sale, which could include the direct labor, you see, the raw materials to produce those goods you are going to sell, and other manufacturing expenses, basically the direct manufacturing expenses. Take an example to know how do you know that this is cost of sale. You look at this example here. We are saying if the clothing store spends 40,000, suppose this company spends 40,000 on fabric, sewing, and labor. This would be direct labor to produce the shirt. We shall say the cost of goods sold or goods produced is 40,000. Basically, the money is spent to produce the good, or the money is spent to buy goods for selling. That direct cost we are talking about. Here, under cost of goods sold may include things like purchases. You know, the purchases, and I talked about purchases in the previous videos. It may include things like carriage inwards, or carriage on sale and purchases. The transport cost you incur to buy goods maybe from the wholesale, you bring to your retail shop so that you can sell. So this cost of goods sold, whenever you find this, it includes direct cost. But now direct cost example, which is commonly used, the purchases. We shall record it there as we determine cost of sale. We shall talk about purchases. We shall talk about transport costs to bring these purchases to the business. That one is called carriage on purchases or carriage inwards. Now, having seen the revenue, and I believe we're okay with revenue, we're okay with cost of goods sold, we can as well determine gross profit. Because the moment you have what you have received in form of your sales or revenues, then even the direct cost in form of cost of goods sold, it is very easy to determine gross profit. And for gross profit, you are saying is the profit remaining after subtracting cost of goods sold, that is element number 2, from our revenue. That one we just get revenue minus cost of goods sold. What you remain with? You have what we call gross. It shows how efficiently a company produces and sells its goods. What does that statement mean? It means it is easy to compare to know, yes, I have generated 100,000, but I incurred 50,000 to produce or to sell that item. Meaning the difference is profit. Don't forget, this profit generated at this point is before considering other operating expenses. We shall see other operating expenses which are not direct, like for cost of what? Goods sold. So at this point, determining the gross profit becomes very easy. Just get element 1 minus element 2. That is revenue minus cost of goods sold. What remains becomes our gross profit. Hope even our element number 2 is okay. Number 3 is also okay. Let's look at element number 4 under our income statement. We have what we call operating expenses. And these ones, we are looking at costs you incur to run the day-to-day activities of the business, daily operations of the business. You cannot operate the business without incurring. For example, you think about rent, where you're going to sell your products from. Think about transport costs. Think about telephone charges. Maybe you make a calls to supply and what have you. Those operating or daily expenses you incur. That's why we're saying these are related to companies' regular business operations, excluding goods, cost of goods sold, because these are direct. We are talking about indirect expenses, which may include salaries and wages you pay to your workers, transport, water bills, electricity, among others. All those expenses, we shall list them under what we call operating expenses. Then, lastly, under our income statement, component number 5 is net income. Some people may call this net profit. This is the final profit. Final profit or loss after deducting all expenses, including operating expenses, interest, and tax paid from the gross profit. Meaning, To get our net income or net profit, we need to get our gross profit, that is element number 3. We shall subtract other operating expenses. Which operating expenses? I have already told you, like salaries and wages, electricity, water bills, transport, among others. And the formula is very easy here. We get net income or net profit equals gross profit plus other incomes. I'll talk about these other incomes, such as discount received, commission received, those other incomes which you are receiving not from your core business activity, but from other services. Then we subtract the operating expenses. Now, you can see when you look at this, our income statement, it becomes very easy if you understand the flow. I'm going to take you through the format, how it looks like. What we said, it shows the profit or loss for them. In other words, it shows the overall financial performance. However, you need to go through and you understand that as I'm preparing the income statement, I must include these 5 elements. One, I shouldn't forget revenue, as we have seen, the cost of goods sold, the gross profit, operating expenses, and net income. The moment you master this and you put all these components or elements in your format for income statement, then determining whether the company has made a profit or incurred a loss becomes very easy. Take a look at the format of our income statement. Let's look at. Yes, as I told you, it's really very important before you prepare income statement. We need to understand the standard format we use. This format we must use at all levels. Then we shall keep on modifying depending on the level where you are. However, I have tried to include all the components of income statement. Where we talked about the revenue or sales, we have included the cost of sales or cost of goods sold, gross profit, operating expenses, and net income or profit. So I'm going to take you step by step. What you need to know to do as a student, just master this. The moment you understand this, you enter your examination. When you know this, of course, they will present with you the figures or the amounts, and you just fill in, then to answer. As we are starting to go through this income statement format, you need to know that our end goal or result is to determine whether the company has made a profit or has incurred what? A loss over a given period of what? A given period of time. Number 2, you need to understand that this income statement is prepared usually annually. Annually, of course, that is once in a year. Meaning, whatever you're going to see here is for the whole year or 12 months. For example, if you find sales are going to be for the whole year. If it is salaries or expenses will be for the whole year. So as we are preparing, you should bear in mind that whatever you see here is maybe the total revenue, total expenses, but for the whole year or 12 what? 12 months. That is our counting period. Let's start. When you look at this format, I have just summarized it for you here. It has 4 columns. Column 1 is for particulars. We have column for amount, where we shall record the amount column, meaning I have put for you 3 columns where we can record amounts. I'm not saying you must put 3 columns, depends on your level of accounting. Here, the reason why I have put 3 columns to simplify for beginners basically in accounting who may get confusion in how we come up with different figures. But for you, if you are an expert, you are at advanced level, intermediate level, even 2 columns may be enough for you. Standard doesn't restrict us on 3. You can even use it 2 or 3, even more, depending, but you have to be organized. I talked about component number 1, revenue. I said you start with your revenue or sales. And I told you this is the total money you receive from selling goods or providing a service. But here we are looking for the entire year, since this one is prepared annually once in a year. You record your sales there. This I'm using X to represent unknown, meaning the figure will be given to you. So if they give you that sales for the year was maybe 10,000, here we record 10,000. I'm just putting the X or using X to show that they are representing unknown amount, which we shall look at as we move on. You just go to your trial balance or any information given, you pick sales, then you record in our middle column there. After that, you need to understand, when we make sales, some Goods may be returned back in the business by the customers. Suppose you sold the goods and you have already recorded your sales, and along the way, a customer brings back the goods in the form of, we call that returns inwards. Once someone brings goods back to the business, what do? You cannot continue to consider your sales or your total sales as maybe 10,000 or 150,000. What do? You go ahead and you reduce, you subtract any return made by the customer. Goods being returned by the customer, you subtract. So we shall get our sales or revenue, we subtract these returns inwards, or we call it sales what? Sales returns. So you check in the question given. If at all you have any return, you subtract. However, I'm just giving you standard format. I'm not saying that whenever you sell goods, you have returns. No. Sometimes you can sell goods and you don't have any customer returning goods. If you don't have returns, you may not even put less returns. Or if you have mastered this, here you can put less returns is 0 because you don't have any goods being returned by the customer. But even you may not put this. So I'm just giving the standard format, incorporating everything. So when you get our sales, you subtract returns inwards. Automatically now, you get what we call our net sales, or the actual sales after subtracting any return which may have been brought by the customer back to the business. Having seen our revenue, what we call net sales, by looking at total sales for the year, you subtract total returns for the year, then the remaining balance is what we call net sales or the net revenue. You can now go ahead to subtract our cost of sales. Don't forget, I told you cost of sales involves direct cost you incur to produce this product or to sell this product. Now, sometimes they may give you may be given with cost of sales direct, but chances are high that they will not give you cost of sales. They want to test you to know, do you know how to find the cost of sales? That's why I'm putting for you here. Yes, it is net sales. We are going to subtract cost of sales so that we can determine gross profit. However, where cost of sales is not given, you have to calculate. If it is given, you just take this cost of sales, you subtract here. But chances are high that cost of sales will not be given. So what do? You need to calculate the cost of what? Cost of sales. How do you get cost of sales? You will check the opening stock. You record it there. The stock you have at the beginning of the year, or at the beginning of trading period or accounting period. Then we are going to add our net purchase. But still, chances are high that the net purchases will not be given. We shall get the purchases, which is this one. We add carried inward. Why do we add this carried inward? This carried inwards, I'm looking at transport. Transport on purchases. Transport on purchases. So when you buy goods from the supplier and you incur some transport costs to transport them from the supplier to your business, any cost incurred in form of transport, we take that as carried inward and we add on our purchases. That's why we put it here. It is transport cost on purchases. We add on our purchases. It increases the purchases. Then, if you reach your business as well and you return some goods to the supplier, suppose you reach the business, you have bought your goods, reach the business, and you realize that some of the goods bought are not the right order, expired, not in a good condition. You decide to return back to the supplier. You cannot continue counting your purchases that I bought maybe my goods of 100,000. We have to subtract the returns you made. So the moment you return some goods back to the supplier, you have to come here and you subtract it so that you can determine what we call net what? Net purchases. Now, here what you need to know. The purchases, net purchases will not be given to you directly. You have to calculate it. Check through the question. Do you have any carried inward or what you call carried on purchases? You add on your purchases. If there is any return outwards or purchases returns, you subtract so that you can determine net purchases. Now we understand. You have your net purchases and you have your opening stock. So the moment you add, when you add opening stock plus net purchases, automatically you'll be getting your goods available for sale. I think you can see this. Goods available for sale. That is direct. You get your opening stock at the beginning of the year. You add what you have purchased, because even your purchases are goods for sale, right? So when you add opening stock plus net purchases, automatically you get goods available for sale. That figure will not be given. You have to calculate it. You need to follow through the right procedure so that you can present your income statement in the right way. So you have your goods available for sale. What do you do to get cost of sales? You check. In most cases, they can put opening stock in additional information, because in income statement and in trial balance, if the question is given to you is in the form of whereby they have given a trial balance and you are required to prepare income statement, this closing stock will be outside the trial balance, or what we call in additional information. You check stock at the end of the year. If your year ends on 31st December, that will be your closing stock or inventory. You come here, you subtract from your goods available for sale. So the moment you get closing inventory, you subtract it from your goods available for sale. Automatically, you are going to get your cost of goods, or cost of sales. Now you look at this. We have done all this working because we are looking for cost of sales. But if the question was direct and cost of sales was given, you check when you check your question, you have your revenue, figure is given, you have cost of sales, figure is given. You don't need to go through all this. I'm just giving everything on the standard format. Then other stages we shall be adjusting. But if cost of sales is given, you don't need to go through all this. You just come here and Excel, you put there, you less or subtract cost of sales, you put the figure there. And as I told you, the chances are high that you will not be given cost of sales, meaning you have to go through all this process till you get your cost of sales. Put it here. Then you will have net sales minus cost of sales. And your end result, when you get net sales minus cost of sales, your end result will be the gross profit. Remember, I talked about gross profit, and I gave you even the format. I said gross profit in the profit when you get revenue minus cost of sales before subtracting other operating expenses. So this is our gross profit at this point. By mere getting revenue, we subtract our cost of sales. What remains is our gross profit. Hope you can see now we are moving. Please don't start this number if you don't have the format for income statement. First master, we are going to try an example, practical example, but step one is to understand the format. You shouldn't stop here. This is one of the elements of income statement. Remember, I talked about revenue. You have seen how to come up with revenue as the component of income statement. You have seen another component called cost of sales, and you have seen how to come up with cost of sales. Now we have seen the gross profit, and you have seen how we come up with gross profit. Let's try to look at other parts. When you get gross profit, what you need to know, this profit you are getting it from your core business. When you get revenue minus the direct cost, that is cost of sales. But you may have other incomes from other sources which are not from your core business activities. For example, maybe the discount received, the commission received, different incomes which you may receive from other sources. Please don't ignore them. You have to disclose by adding as well to our income statement so that we can determine the overall profit for the business. So if you have such incomes received, we call that other incomes received. Hope you can see that. Other incomes received. We have to add on our gross profit. Examples, we may have things like a discount received, we may have commission received, among other incomes, which may even include the rent received, commission, discount, and any other income received by the business but from other sources, not from its core business. You add them and you bring them here so that we can get the gross profit. We add other incomes received, and there you get what we call gross income. Meaning this gross income contains two elements, the gross profit and even other income received. You check the question. If there is any other income received from other sources, please, you bring and you add on your gross profit to get the overall gross income for the business. Having seen that, then we can start thinking about what we call operating expenses. Don't forget, we are looking at expenses you incur on day-to-day activities so that you can generate your revenue. Like salaries, when you don't pay salaries, you will not make what? Workers will not work. As they don't work, means you will not be able to generate revenue. So the expenses still will be given in the exam. Check, we have salaries and wages. We have, you bring it here, you bring water bills if given, you bring electricity if given, rent, transport, telephone charges, meals, etc., even others. I'm not saying these are the operating expenses you must include in your income statement, but I'm looking at any operating expense you incur in your business to run the business. So it may not be salaries, may not be water bills, but you look at your business. Which expenses are you incurring to operate, and you outline it here. Check the question. If salaries and wages is maybe are not there, not given, don't put it here. Go through and define what to include in your income statement. Get total for operating expense, you bring it here. Now, we have gross income and we have operating expenses. Meaning, when you get your gross income here, you subtract your operating expense, automatically you are going to get your net profit or net loss. At this stage, we can stop here. However, as we move on, we can add just by looking at things like, interest expense, the taxes. We might as well, because this is operating profit, but we can subtract the interest. We get the tax paid, we subtract it to get the net profit or net income after tax. We shall keep on adjusting depending on the level. And this is the standard. Once you reach here, it means you can do any number concerning income statement, and you can be able to determine whether the business has made a profit or has incurred a loss. I want to make a note here. From the previous video where I was talking about ledger accounts, I talked about two types of ledger accounts. And accounts, I talked about the nominal accounts and I talked about real accounts. And I said nominal accounts, those accounts that show the income, they show expenses, they show gain and losses. Then for real, I talked about, they represent assets, liabilities and equity. So what you need to know about income statement, we only include the accounts, like a rent account, transport account, we only include the accounts for nominal, or they call nominal accounts, or we only include accounts concerning incomes, like revenue, expenses like salaries, losses, among others, and gains. Don't bring here assets in our income statement. Don't include any liability in our income statement. Don't put equity or capital. Even when it is given in a question, you skip that. Just know income statement deals with only nominal accounts. Which nominal accounts? That is revenue and expenses, maybe losses and even gains for the business. That's what we call here. They are going to give you a question whereby they include the assets, they include the liabilities, they include the capital. All those items for your accounts, you ignore them, only pick the one for nominal account. This is our income statement. Before we go into figures calculating, please first understand this format. This is a standard format. The moment you master this format, you can handle any question they bring to you. As I said, I will keep on adjusting this format depending on the level, but for now, let's first master this format. The moment you get this, you'll be waiting for any question and you can handle it and it will come out, I can assure you. Thank you so much. I believe now the format is okay. Income statement well explained. I believe you are going to keep up with us as we go through another video where we shall look at the practical example about income statement. Keep with us. Thank you very much.